Coming up on Market to Market, leadership picks teams to battle a farm bill deadline. Firefighters battle back against out-of-control fires in the West. Commercializing the next generation of cover crops.
They can't grow anything else.
And market analysis with Elaine Cubb next.
Cattle feeding industry.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, August 3 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The nation's annual deficit is approaching 5% of GDP, nearly $1 trillion annually as tax cuts come into play and the economy surges. The unemployment rate ticked down to 3.9% as 157,000 jobs were created last month. This is below the 6-month average, but economists remain impressed. The Fed has been tracking the numbers over the last few quarters and left interest rates alone. In a snapshot of Midwest vitality, the Creighton Mid-American Economic Index fell 4 points but continues to point towards growth. President Trump has threatened an additional $200 billion in tariffs on Chinese goods. China has prepared a $60 billion counterstrike that's expected to increase the squeeze on U.S. agriculture. As both sides continue their international shoving match, a host of domestic issues are waiting in the wings. Among them is the 2018 Farm Bill, which is expected to have a healthy debate of its own. Peter Tubbs has more.
The House and Senate voted to send the 2018 Farm Bill to conference committee this week as the document trudges towards a final vote in Congress. The current Farm Bill, which was signed in 2014, expires at the end of September 2018. The most contentious fight of the conference will be over the future of SNAP benefits. In June, the House passed an amendment requiring those receiving benefits to work 20 hours a week to qualify for SNAP monies. The Senate later defeated a similar amendment to its own version of the Farm Bill. Cotton growers may benefit from the current versions of the Farm Bill. The crop insurance title includes continuation of the agriculture risk coverage price loss coverage insurance program for cotton at the current rate, an item threatened in earlier editions of the measure. The Senate version seeks to limit total farm subsidies to large farms, as well as containing payments to farmers, spouses, and a single farm manager. Congressman Michael Conaway, chair of the House Agriculture Committee, is optimistic that a compromise bill can be reached. Senate Agriculture Committee Chair Pat Roberts is looking forward to starting the process and providing certainty to U.S. farmers, families, and rural communities. The National Farmers Union asked House leaders to include language in the bill to mitigate the harm of the significant and lasting market disruptions brought on by the nation's current trade disputes. With the August recess shortened to 1 week, Congress will return on the 13th to work on differences between the two bills. For Market to Market, I'm Peter Tubbs.
Forest fires in the West are a common occurrence, but the intensity and frequency have been on the rise in recent years. California Governor Jerry Brown has called the increase, quote, uncharted territory. John Torpy has more on fires in the western U.S. that have crossed over the $1 billion mark in damages and brushed aside 6 lives.
Record-setting heat, coupled with years of drought, have led to the growth of numerous wildfires in the West, leaving charred homes, businesses, and firefighting budgets in their wake. Random storms have brought little in the way of relief for parched portions of the western United States. According to the U.S. Drought Monitor, areas of Colorado, Utah, Arizona, and New Mexico share the driest part of the country. In the Pacific Northwest, rainfall levels over the past 6 months have been half of what normally falls in the area, setting the scene for more than 40 wildfires in the region. The National Interagency Fire Center put the call out for firefighters from Australia and New Zealand to help fight the blaze that has scorched more than 300,000 acres. In Northern California, the Carr Fire has taken 120,000 acres while simultaneously burning through 1/4 of the state's firefighting budget, just 1 month into the Golden State's new fiscal year. For Market to Market, I'm John Torpy.
In 2025, Minnesota Governor Mark Dayton hopes the state reaches his goal of improving water quality by 25%. Dubbed 25 by 25, the strategy puts more than $350 million towards the objective. The plan includes incentives for creation of buffer strips and encourages changes in tillage practices. The initiative has sparked a new venture that explores something beyond just planting cover crops. Josh Bittner has more in our cover story.
They're using the same principles on the development of this species as they would use on barley or wheat and other crops that are being developed.
Dr. Don Wise is spearheading an initiative to revolutionize food systems, create rural jobs, and improve soil and water quality by commercializing conservation.
So this is a field of Kernza, really a research site.
The University of Minnesota's Forever Green initiative is engaging over 60 faculty, graduate students, and researchers, along with USDA and corporate partners, around a suite of 13 underdeveloped winter annual, perennial, and native woody crops.
As we know, a society asking farmers, well, why don't you grow something else? They can't grow anything else unless there's a market for that other crop. The land-grant universities took on the grand challenge of producing hybrid corn. We believe it's equivalent to that, and now the tools are there to actually develop these new crops in a relatively short period of time. And because of the biotechnology that's currently available, we're talking about domesticating some wild species within a decade rather than 150 to 200 years.
Spurred in part by state efforts to reduce nutrient runoff in the Upper Mississippi River watershed, Forever Green's agricultural supply chain collaboration is devising markets for a host of new value-added cover crops like pennycress and camelina that fit into traditional farming rotations.
You could put it in as a relay crop, plant soybeans into this crop early in May, and then harvest the camelina and allow in the soybeans then to come through.
From the St. Paul campus, Wise points to a handful of affiliated projects sprinkled across the land of 10,000 lakes.
The benefit is that you're getting 2 sources of oil off of this field instead of just one.
At the university's Southern Research Center in Waseca, Associate Professor Greg Johnson is implementing the new approach.
One of the keys is flexibility. We want to be able to give growers options. We want to have a portfolio of choices that we can give them to match their operation or match markets, however they might evolve.
Johnson works with the Agricultural Utilization Research Institute, a nearby nonprofit that helps refine and develop new uses for agricultural products, like cold pressing camelina.
There you see the oil starting to come already.
Senior co-product scientist Alan Doring says businesses are interested in the plant for cooking oil, bio-based plastics, alternative fuel, and livestock feed.
It'll sell very similar to soybean meal, but at maybe a 18 to 20% discount just because it's a little lower in protein. But what makes up for some of that is the camelina meal still has a high level of energy in it that brings value back to it.
Camelina's high flash point also makes it ideal for biodiesel production.
Here you can see the methanol on top and some biodiesel on the bottom. And then we'll distill off that methanol and have our biodiesel samples.
Back near the Twin Cities, Sartec Corporation evaluates the viability of several different biofuel feedstocks.
We've done a bunch of different oils, including camelina, pennycress.
Senior R&D scientist Ron Feedy's findings have helped determine whether these new sources can be scaled up for mainstream use. But Feedy says variables like temperature and pressure aren't the biggest hurdles to turning a profit.
It's more its availability, and can we get enough of it in to merit 10,000 gallons a day.
There's many health benefits now to this camelina oil. You should take a look at it.
Local chef and PBS television personality Kurt Anderson was approached by Forever Green to evaluate camelina oil in his kitchen.
I have a rice that I've cooked, and I've got some potatoes that I wish to fry. So using the camelina oil, I just need to give me a few drops in the pan. When you smell this, it has that nuttyish, grass aroma. My friends, here comes the steak part of it. See how it just sizzles? That's what we're after. The oil is holding up wonderful, and you would definitely see that difference in lower quality oil. That's as good as I could expect from any other oil that I want to pair it up against.
While plant oils occupy a large share of Minnesota's initiative, Dr. Wise also points to advancements in fruits and herbaceous mixtures that may help farmers in the difficult choice of what to grow.
The American hazelnut was never developed as a major nut crop in the upper Midwest.
Wise believes his work may add to the lifespan of a number of crops, like kernza, a perennial wheat useful in baking, brewing, forage, and biomass. In the shadow of Norman Borlaug, father of the Green Revolution, Wise says Forever Green might allow farmers and end users to share the mantle of good stewardship.
The food industry wants a new story. They would love to market this idea that if you plant kernza or the intermediate wheatgrass for wellhead protection across rural America, and if you buy this product, that product is protecting that water supply, so consumers can participate in protecting that landscape by purchasing that product that carries those different outcomes.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
European drought, strength in the wheat market, and rumors of backroom dialogue helped move the grain markets higher. For the week, September wheat rose 26 cents while the nearby corn contract finished 8 cents higher. The soy complex started the week higher as new buyers took over Chinese market share, but by the final session, the September contract fought off rumors of an escalation in the Chinese-U.S. tariff battle to hang on for a 16-cent gain. September meal failed to push off the news and lost $1.20 per ton. December cotton shrank 22 cents per hundredweight. Over in the dairy parlors, September Class 3 milk futures were unchanged. The livestock sector finished mixed as the October cattle contract gained $1.52, September feeders added 85 cents, and the October lean hog contract shed a dime. In the currency markets, the U.S. dollar index increased 50 ticks. Crude oil dropped 40 cents per barrel. COMEX gold fell $9.50 per ounce. And the Goldman Sachs Commodity Index lost nearly 2.5 points to settle at 461.90. Joining us now to offer insight on these and other trends is one of our regular market analysts, Elaine Cubb. Elaine, welcome back.
Hello, Delaney.
Elaine, we had some interesting news happen in the wheat markets this week. We're going to say undisclosed news source, mainstream news source, had a headline that sparked a almost near limit up day here in the wheat markets. Is that going to limit our potential moving forward for another rally?
Well, and it wasn't just this week, and it wasn't just that one day. The European wheat prices have been rallying for weeks now based on that exact story, the idea that there's very hot, dry weather in Europe. You know, I earlier in the show, you guys mentioned the fires here in the United States. It's very dry areas in the U.S., but it's really more than that. It's Australia, too. Some portions of the Australian wheat crop are quite dry, and they're paring back their production estimates. But really that sparked this week, the thing on Thursday that really caused the top to go into that European wheat chart was the Ukrainian ag minister saying that they would restrict sales, and it turns out that that's not the truth.
That was a false headline.
It was a false
Fake
headline,
news,
yeah.
right?
So they had to clarify it, but they still will not have as many wheat supplies to export as usual, because they legitimately do have very poor harvest results in Ukraine, in Russia, in Germany, in Poland, in France, pretty much everywhere on that continent. So that's a real thing that's happening on that European wheat chart, and it went to a high of, I don't know, 215 euros per metric ton, which in US dollars and cents, that's like $6.96 per bushel. So we would still have room. We have not matched that penny for penny, that rally that we've seen in the European wheat prices, but certainly we have seen a rally. The KC wheat contracts have rallied 27% based on that arbitrage of the European to the US wheat prices.
With that being said, we have all these issues, as you just mentioned, in European Union, in Russia and Ukraine. What is that going to do for our US wheat market? Does that open the door for more export sales?
Yes, absolutely. Now, if we saw confirmation of that we already the hard red spring wheat is definitely the star of any weekly export sales report. But if we would see confirmation of more export business, particularly for the hard red winter wheat, that would be very interesting to wheat basis. But so far in the spring wheat, where we're just starting to see harvest really heat up, the merchandisers have really resisted, or not really, but to some extent they've resisted that rally with wider futures spreads and weaker basis, because they know they're going to get more bushels, a larger crop this year than last year, obviously for the acreage increase, if nothing else.
Okay, Elaine, I want to move on here to the corn markets. We closed above the 50-day moving average for the first time here. Moving forward, are we going to continue to see some strength in the corn markets?
I think the corn market's potential to continue higher is based not really on any bullishness here in the United States, because I think we're about to see this next week. There's another WASDE report, a supply and demand report coming up that's very likely to increase the USDA's yield projection for U.S. corn, and I think that's legitimate.
Okay, let me interject and ask about that. What do you expect to see on the WASDE report?
Well, there's private estimates somewhere in the 177 bushels per acre range, and I don't think those are necessarily crazy. The condition ratings are very good, higher than 70% rated good or excellent, and that's not even as good as was seen in 2014 or 2016. So I think those are real. I think the condition ratings are good, despite the little pockets that do have the dry weather or the drowned out spots. But I think supply-wise in the United States, it's bearish at the moment, but there is this matter of the feed grains in Europe. That same hot, dry weather in Europe. China is starting to get some dryness in their corn production, so the global feed grain supply and demand situation could start to get more tight, and we could start to see some strength in that corn market.
Okay, we touched on a couple important issues here. We got some great social media questions in this week, so I want to get to one here from Lexi in Iowa. With a fast maturing corn crop, decreasing corn exports, and record-breaking yield predictions, will the growing U.S. ethanol industry offset some of those macro issues that are being figured into the market?
That is a one bright spot. We are seeing that. The over 1 million barrels per day keeps on being reported for ethanol production in the United States, and it is being exported. I can't pull the numbers off the top of my head, but our exports to Brazil, other South American countries have definitely increased year over year. To Canada, there's a lot of potential for ethanol exports to maintain the strength in that ethanol market and in corn demand for ethanol. But price-wise, the supply here is still the thing that's going to be keeping that from getting crazy.
Okay, let's do a quick price point here. December corn contract, what are you expecting it to be at? We've touched above 4 now again. Are we going to see another harvest low, or do you think we've kind of factored that into the markets already?
I think it's entirely possible that any upward steps that we see in the futures could be taken away by weaker and weaker basis as harvest gets closer, as this big harvest gets closer.
Okay. Elaine, let's move on here to the soybean markets. We started the week out really strong. We were putting some cents on the board. Then we pulled back here towards the end of the week. What happened?
Sort of rumors giveth and rumors taketh away. The soybean market just rejoiced when there was even a hint that the U.S. and China might start to talk about normalizing that trade relationship. Soybeans shot up 28 cents. And then when it turns out that that might not be the case, it's just sort of give and take on any given day. What is the rumor on that day? So until something changes, I think the soybean market will sort of be stuck in this range. I think it has found a neutral range to trade in, somewhere above 822 and somewhere below 922 on that new crop November contract. So I think we might just be bouncing along here until and unless something changes.
Okay. You opened the door on tariff news, and I know you follow a lot of geopolitical stuff going on, so I want to get your opinion and thoughts on this. President Trump had the ability to put or enact tariffs on August 1st. Now he's threatened potentially to put some more on September 1st. Why didn't he enact them on August 1st as opposed to pushing them off another month?
I cannot speak to the decision-making process behind that. I don't know. But the thing that the market responds to is that China responds with retaliatory tariffs against soybean oil, against liquefied natural gas. I mean, those are things that will affect commodity markets, absolutely. So nobody really seems to be winning in this trade war at this point in time.
I want to talk about liquefied natural gas and the oil markets. Did the oil markets respond to that news, since I think it was China's #1 importer of gasoline? It said no more. We're not going to take U.S. ethanol and gasoline anymore.
Yeah, I think the place to watch will really be the oil companies themselves. That will really affect their profitability, their ability to export a byproduct of the oil drilling. So that's the place to watch for that. But again, it's so much up in the air. One hopes that some of this will get resolved.
Absolutely. Elaine, let's move on here to live cattle, because we've had kind of a roller coaster week again this week. We closed pretty well on the day here on Friday. We've had a decent bounce in export sales as well. And after our marketing year low, I think, what was it, 2 weeks ago? Where do we go from here?
Yeah, there was a nice boost today in the futures, and it again was just that cash business that developed very late here on Friday. So the live cattle market is strong because when those supplies do get offered to the packers, they want to make their $300 per head profit margins.
Are they making that at this point in time, though?
That's what it pencils out to be roughly at this point in time. So they do want those supplies when they come on market. And fortunately, as you mentioned, this is one market where exports are not bad news. We do not have terrible disasters in beef exports. So I think the line for beef, for live cattle anyway, is just good, steady strength.
Let's talk a little bit about packer margins and boxed beef prices. We were at the lowest level since December. Packer margins are getting a little bit thinner. Is cash going to soften with all that being said?
It could, especially seasonally. We're going to start to see that happen. A lot of it really depends on what happens to the supplies, the cattle that have been on feed and have been held on feed longer as they come to market, let's say in September. A lot will depend on that, and a lot will also obviously depend on the strength of the U.S. consumer, whether the retail consumer continues to feel optimistic enough to go and buy those beef prices.
Is that the reason that futures are trading at such a discount to the cash right now?
No, I don't think so. I think that's possibly a reflection of the supplies, the cold storage supplies that people can push off. Well, a wall of beef, let's call it that.
Absolutely. Let's talk about feeder cattle. When we look at weather, that's affecting not only the commodity markets and the grains, it's also affecting, or seems to be affecting, the feeder cattle markets. What's going on there? What are your thoughts?
Yeah, I think there's very strong resistance for the October feeder cattle contract. I don't think we're going to see that be able to break above 155, and it's not there now, but I think that has been built onto the charts, and that will certainly be the case if corn prices build any sort of a rally or a weather rally as we get through the summer. I think feeder cattle have the potential to move lower.
Okay. Even with the reversal on Wednesday, do you see us, I mean, we're in an upward trending channel right now for feeders, but you're not optimistic that long term we're going to stay in that channel?
No, because it's a much more neutral outlook, I believe, for the feeder cattle based on what can people afford to feed. I think that the prices of feed, the prices of producing these cattle has been built into that market, and we've seen that resistance, like I mentioned, at the 155 level, and I just don't think that you're going to be able to find somebody who's going to come in there and want to buy those supplies at a higher price than that.
Okay. Elaine, let's wrap it up here with the hog markets. Export sales have held up pretty well in the hog markets as well. At one point, do we start to see these strong export sales reflected in our futures contracts, because they're still just not doing as well as we anticipate them to do?
They're doing very poorly. I mean, what's the word for a nosedive in hogs? Perhaps it's a snout dive. I mean, it's just going down and down and down. You see the actual cash market going down 40, 60 cents every day. The index going down $1 a day, and the futures just have to follow that cash news. However, they have pulled back, 25%, and it could be a scenario like soybeans where the market pulls back because of tariffs news or because we've sold very little to Mexico. You mentioned good export news, but it doesn't come from Mexico and it doesn't come from China right now. So it could be that the futures market pulls back to a certain price and decides that we've priced in the tariff news, and maybe it can form a bottom and bounce back up, just like soybeans did.
Just like soybeans. Elaine, I want to continue the hog discussion in Market Plus, but that's all the time we have today.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Market to Market may be airing in different time slots due to fundraising on PBS. So if you find value in our program, please consider making an investment in a service that provides you with the news and market analysis you've come to know and trust. Join us again next week when we look at a partnership between a Midwest dairy producer and an East Coast dairy giant. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.